You've come off a fairly difficult quarter in terms of volatility. You've delivered on the numbers, in fact, bettered some expectations as well. But do you continue to see the environment being, as volatile as it was the previous quarter, or do you think that you now have more visibility in terms of spending?
Well, I think that what's interesting is that if you look at the global environment, one of the things that we see is that every single business is in some form of transition, right? So you're speaking to the macro, but if I bring it down to industries, every vertical that I can think about, whether it's manufacturing, whether it's healthcare, financial services, basic industries, oil and gas, every single company on the planet is in some form of disruption. And if you just consider taking a step back, the rate of innovation that's occurring in the markets. Last year, roughly $130 billion was invested into venture capital at a point in time where it is less expensive than it ever has been to start a company. So it used to be that it cost you $5 million 10 years ago to start a company. Today, it's closer to $5,000 to start the average internet startup. So more innovation, faster innovation, cheaper innovation, and more capital flowing into the marketplace is highly disruptive to traditional players in the marketplace. And where we see the opportunity for Cisco is as companies are faced with this trend of digitization and disruption in their businesses, we actually are well positioned because of our own transformation to help those companies make that transition into the next generation version of what they need to be. And so we see, obviously, challenges in the global environment. We've talked about that in the past, but we also believe that there's a huge opportunity for us to have an impact and to continue to grow and to add value to our shareholders as a result of that.
So outside of India, let's talk about China, because that's, as far as the macros is concerned, a big worry for the rest of the world. But you're actually doing well in China, and your business is up, what, 60-odd%?
We're very committed in China, and we obviously have had some success there in terms of the growth rates. We believe that just as in India, that partnering with government and partnering with a local business environment is actually crucial to your success. And I think the Chinese context is no different than that. I do think that one of the things that we continue to look at is how do you partner effectively, whether it's in the Chinese context or in an Indian context or any global context, who are your partners ultimately that you need to work with to drive success? And part of how we've been able to succeed in the Chinese marketplaces is by working with local companies like Inspur and a number of others that allow us to be able to have greater access to customers, greater localization of solutions, and ultimately to be able to deliver something that is better for a customer than they can acquire or to engage with or to bring in from any other vendor on the planet.
Since you're talking about partnerships, let me ask you about the strategic rationale behind the partnerships with Ericsson and, of course, Apple. And are we going to see much more of this sort of collaboration in the future?
Well, one of the things that I firmly believe is that as the rate of innovation and digitization and the inherent disruption that brings accelerates, that no one company has everything in its portfolio to drive success. You have many things that are going to be strategic to you that you do better than anybody else, but in order for us to actually deliver the best possible outcome, and it really is about business outcomes to our customers, that you need to partner with world-class companies to be able to deliver that. So whether that is bringing an excellent and outstanding and totally differentiated enterprise experience into the office through a mobile device that integrates with infrastructure and endpoints that are in that environment, which is what we're doing with Apple, or whether it's the ability for us to deliver an operator or a service provider the best possible end-to-end radio services, IP, routing, capability and infrastructure, as well as software, as is the case with Ericsson, those are unbeatable in our view combinations, and they're not possible unless you do partner.
But what does it finally mean in reality when you actually get Apple and Cisco to work together, Ericsson and Cisco to work together on the ground in terms of execution? How easy or difficult is it?
Really working through not just architecturally how do these things fit together so they're better than anything else that can be delivered, but also working through our relationships with the people who have to execute. Can we work together as a business culture to deliver for our customers? can we move with the speed that both ourselves and our customers expect? And ultimately, our confidence in the Apple and Ericsson relationships are rooted in a fundamental understanding that not only are the technologies and architectures and businesses highly complementary, but that our cultures and the teams that are executing on the ground, that are dedicated, actually, on both sides, to executing on the ground, are well positioned to do that. And if we didn't feel that, we wouldn't have entered into these relationships.
So given the fact that you're confident of both these partnerships and the way that they've turned out for you, can we expect more?
Well, I think you're...
And which areas of complementarity would you hope to sort of collaborate on?
Our view is that it's really critical to identify the right handful of relationships. And when I say handful, I don't mean dozens.
Yeah.
I really mean a small number where you can go very, very deep in a trusted way with your partner, where you have each other's back, where you may not, in a single instance with a particular customer, always come out with a 50-50 benefit, but over time, over many, many combinations of solutions that you deliver, you really have that mutual benefit and impact. So I believe we'll do more. We'll be thoughtful and we'll be selective about the relationships we put in place.
Talking about priorities now, and since the focus seems to be on accelerating the innovation engine in the bid to try and complete your transformative journey, what next now on the agenda?
Well, I think that one of the most important things for a company like Cisco at our scale to do is to be as complete in what we can deliver as possible along with our partners, but also to continue to balance the right business models that we deliver to customers. And I think one of the things that we're very focused on is how do we continue to deliver flexible consumption models, operating expense-oriented models that traditional enterprise customers and service providers increasingly...
and that's a big shift that you've made.
Well, I think it is a movement towards much more recurring revenue model. And so we obviously continue to grow the percentage of our business, which is recurring revenue. Most of the acquisitions that we made last year really have focused on recurring revenue models that allow us to be able to predict more fully the revenues that we drive as a company, and at the same time are catering to a consumption approach that our customers increasingly are embracing. And the other major element that we're looking at is how do we continue to do that, plus provide much more insight and analytics and data capability at the very edge of the network, where processing and delivering an outcome quickly, real time, is going to be increasingly important.
So will the levers to drive growth going forward continue to be the new data center platform, your securities business, your cloud business? Because you've seen a significant momentum being built on these sort of new businesses in that sense.
Well, absolutely. I think that as you look at security, as you look at the transition to hybrid cloud in particular, I think the view that customers have that there's going to be some combination of the benefits of a public cloud, but also having the on-prem flexibility and capability and the cost profiles that come with that, as well as what we're doing in the data center, are all critical areas. In addition to IoT, which obviously we're going to be a leader in, and I think the acquisition of Jasper is a good example of where we're driving. I think if you look at the security space alone, in the last 25 acquisitions that we have done, 7 of them have been in the security space. And so we are really taking that area and that domain seriously in terms of the importance for customers, where it's preeminent amongst the priorities for the customers that we are working with every single day, whether they're enterprise customers, small, medium business, or operators. And it's an important area where we now have leadership very clearly as the #1 market leader in security, and we're going to continue to build on top of what we've been delivering as a security vendor with an architecture that's pervasive, as well as bringing in capabilities, whether it's through investments or partnerships or even M&A, that continues to distance ourselves from the rest of the marketplace.
Okay, so that's as far as the growth drivers are concerned. But if I were to ask you to look at your dashboard today, and besides the volatility that we see on the macroeconomic front, what would be some of the other challenges or concerns that keep you up at night?
Well, I think it's the ability for us to move with the requisite speed. I think that ultimately, as I said before, we're in an environment where not only do you pay a lot of attention to your scaled current set of competitors in the marketplace, but you also look at disruptions that are occurring from the startup community, from small companies, from medium-sized companies that are innovating very rapidly, which is precisely the reason why we're investors in over 100 companies directly around the world, as well as 40 venture capital funds, is that we need to be in a position where we can identify transitions before they occur. So the thing that keeps us constantly thinking and, for lack of a better term, up at night, is are we going fast enough? And right now, we're going as fast as we can, and we're going to continue to drive very rapid change so that we can stay ahead of the marketplace, that we can stay nimble and agile, and ultimately, as Cisco always has, adapt to the new market environment that we're in.
So let me ask you about the competitive landscape, and you just talked about how you do foresee some consolidation within this space, but do you think that that's going to happen in the near term, or do you believe that that's going to happen in the medium to the long term?
I think very clearly across both enterprise as well as service providers, we've seen the large traditional vendors, the legacy vendors, come together. So whether that's in the service provider realm, where now you're talking about 2 or 3 vendors really fundamentally around the world in that space, or the traditional enterprise infrastructure area where you've seen some consolidation occur in the marketplace. So I think we've already seen some of it, and what we're going to see now, I think, in the next phase is an emergence of new companies that will potentially try to address the vacuum that some of the traditional legacy providers are going to leave, because they will move slowly. They ultimately, through these consolidations, are very likely to not be able to move as rapidly as the rest of the market wants or needs them to. So we look at that really as an opportunity for Cisco, both in working with startups as well as in our own invention and build capabilities to bring outstanding solutions, technologies, and architectures and outcomes to the marketplace much faster than those who have consolidated are able to.
So, going back to India, I think last quarter you were up by about 23% in India. Do you believe that that's going to be the kind of run rate that we should expect, given the opportunity?
Well, we continue to be very focused on driving growth in India, and I think that one of the things that we look at in the Indian context is not just the growth that we drive in the domestic market, but what it actually means for us in
Cisco globally.
Cisco globally. And I think that, as I said before, one of the most exciting things about our business in India is not just the growth and success that we've been able to enjoy and that we would hope to continue to enjoy in the future, but what that means, what that experience means for us as we bring outstanding capabilities to the rest of the world. And I think that's the story of India in many ways, which is how does India compete at global scale while addressing many of the opportunities that it has domestically. And I think there, our agenda and the Indian agenda are very, very much aligned.
Well, on that note, Hilton, it's been a pleasure speaking with you. Thank you very much for joining us on CNBC TV 18. We hope to have you back on the channel, and good luck with India and the rest of the world.
Great, I look forward to it.
Thank you so much.
Cheers.
Thanks, a pleasure.
Thank you.
With that, it is time for us to wrap up here outside the Cisco headquarters in the Valley. From all of us here on this special show, goodbye, and many thanks for watching.